With commodities and stocks higher due to the weaker dollar, it brings us to the big question, what on earth is going to happen in terms of the stock market once the dollar starts rising? We want to bring in Larry Nusbaum, COO of the Vertex Fund and CEO of Ronco. Also, Adam Bold, founder of the mutual fund Story. Great to see both you guys. Larry, you're right here with me. I know you're very bearish on this market right now. Is that attributable to concerns that you have about a dollar that may eventually start to rise?
Yeah, because look at inflation. Right now, look at the euro, look at the Australian dollar, look at the yen. You know, the dollar has been beaten down for so long, and now as the dollar rises, are we going to just print more? Is Barack going to turn on the spigots and we're just going to have more dollars? Where are all these dollars going to go? I see gold going up.
What is the timing on this for you?
I'm thinking 60 to 90 days. Obviously, we want a great retail recovery. The truth is it artificially inflated? And right now, I'm feeling it's artificial. It's a great high right now, and we're on a roll. But what happens January 1 when the bottom falls out?
Okay, Adam, what happens January 1?
Well, I don't think that the bottom is going to fall out. I think that you look at the reason the stock market went down was for two reasons. One was we were on the brink of a global financial crisis, which we've now taken that off the table. The other was a recession. I think the market's priced about where we would be for a recession, and I think that the dollar really it's down from its highs, but that's only because we had this flight to risk at this time last year that is now coming off as people are willing to take a little more risk. I don't see the dollar getting crushed, and I don't see the dollar running away.
At least in 60 to 90 days. I mean, do you have a long-term scenario as well?
Yeah, I think that over the long term, I think that the economy continues to get better. I think that we're not going to see inflation. Nobody really has any pricing power right now. The consumer will buy things, but they'll only buy things if they're on sale. And otherwise, the rest of the economy, I just don't see prices getting too high.
Now, all due respect, Adam, I mean, I apologize, but let's look at where real estate is. Okay, look at the REITs, look at Redwood, look at Cognal, look at all the real estate markets. The real estate markets haven't even begun to lag. I think we're in a situation where we haven't begun to see the effects of the TARP money and this overinflated economy. Look around the world, the RMB. Look at the global economies, the euro, the Canadian dollar now equal to the U.S. dollar. You know what? The gold standard, I think we should go back on the gold standard. I mean, I'm not buying that the market isn't artificially inflated, because if you look at the retail market, except for specialty accounts like Bed Bath & Beyond and Family Dollar and value acquirers, Walmart as an extreme is having huge problems. And I don't think they've seen the end of the problems they're going to face when they have a $10 toy, and that's their main deal, which is lowering prices artificially. I don't believe what we have here. I believe it's an artificially TARP-inflated, government-inflated economy. And wait, you know what? Oil prices, let me tell you, when they close the spigots, the oil prices are going to come back up.
I think Larry Kudlow's got something to say on this one. Hey, Larry.
I want to follow Adam. If I follow your logic, and of course I'm sympathetic to it, then if the inflation rears up, the Fed's got to start raising rates. Now, whether that helps the dollar or not, will the rate hikes really damage the stock market? I guess that's the question du jour.
Larry, quite honestly, I think that we're going to see rates start coming up before the Fed actually does it. I don't think they're going to have to. We had this tremendous flight to treasuries when everybody was scared of anything that wasn't a treasury. And at some point, we're going to see people start going, oh, I guess this stock market rally is for real. I guess that the increase in corporate bonds that we've seen is for real. And people are going to go from being, I'm scared I'm going to lose all my money, to I'm scared I'm going to miss out on the next leg up in the market. And they're going to be repatriating money out of treasuries and into other things. And when you sell treasuries, rates are going to come up.
Okay, Larry, you're shaking your head again.
Three months ago, people were putting their dollars in their pillowcases, and we were worried about free fall. So are we forgetting about close to double-digit unemployment? Are we forgetting about the fundamentals in the economy? If small business isn't able to get a loan, if the liquidity is crushed, if you can't get a remortgage, if you can't get a REIT, if you can't put money into safe sectors and it's T-bills, I would take my money and put it into gold. And even oil. Isn't oil transient right now? Oil's down, but the minute that we want to go back to gas lines, all they have to do are open up the pipelines to increase the flow of oil and then shut it off. I'm saying, where is the best place to put your money? And I wouldn't put it into anything unsafe unless you have a pocket full of gold and you're a leprechaun. Maybe you're buying real estate. But I'm telling you, we're seeing the beginning of the cycle, and we're just at an artificial high.
Okay.
But Larry, there's always something to worry about. There are always a plethora of things to worry about, and I just think, I think more optimistically, I think that we've shown an ability to persevere through things in this country. I think we'll see it again this time.
You sound like Barack Obama. Let's persevere. I want another trite. Is there another speech coming on where we're going to talk about it? We're going to pretend with REITs and whatnot that we're going to talk about the real estate market. I want to know if, as gold goes up, unless we're going back to the gold standard pre-Nixon, I want to know how you're going to tell me what's happening to the global euro and the global economy and currencies of the world. Let's look at the currencies right now. Let's see where our dollar is trading, even versus our northern friend, Canada. Okay, they're basically comparable to us today. Look at today's actual currencies.
Okay, we got to wrap it up there. That was like a mini Santelli, mini Santelli-Leisman debate. Forgive me. Thanks, guys. We really appreciate it, Adam and Larry.
Thank you, Trish.
Thanks, Chris.
Thanks, Trish.
General Motors gives a first glimpse.